Hey everyone, and welcome back to Talk Tickers. Ready to geek out a bit? Today we're going to dive deep into ARM Holdings' Q3 2025 earnings call.
Ah, yes, ARM Holdings. Those are the folks behind the chips that are, well, pretty much everywhere. You're talking smartphones, laptops, data centers, even your smart refrigerator probably has some ARM tech inside.
Exactly. And get this, they just announced record-breaking revenue.
Oh, yeah.
$983 million. A 19% jump compared to this time last year. That's what I call making moves.
Wow, 19%. That's not just good, it's a statement.
Right.
It really shows you how deeply embedded ARM is in everything.
Totally. So what's driving these crazy numbers?
Well, a couple of things. You got to look at the insane demand for compute power.
Yeah.
And then you got the meteoric rise of AI.
Okay, so AI, everyone's talking about it, but how does it actually make money for ARM?
Think about it. Every time you ask Siri or Alexa a question, that's ARM tech at work. Same with driver assistance features in your car. Or when your smart home anticipates what you need. As AI gets more and more complex, those chips, especially the ones designed for AI, are only going to be more in demand.
So they're not just riding the AI wave, they're helping to shape it.
Exactly. And to show how serious they are about being a leader in the space, they're involved in some pretty big projects, like Stargate.
Stargate.
It's a massive AI infrastructure initiative. Budget's over $500 billion.
Wait, hold on. Did you say $500 billion? That's insane. What is this Stargate thing all about?
It's basically all these tech giants getting together to build AI infrastructure on a scale we've never seen. Think SoftBank Group, OpenAI, Oracle, Microsoft, NVIDIA. They're all pooling resources. And right there in the middle of it all, ARM.
Oh.
Providing the designs and architectures that will power this next generation of AI.
Okay, so we've got record revenue, demand driven by AI and compute power, and a central role in this massive AI project.
Yeah.
I'd say ARM is having a pretty good year, so where's all this revenue actually coming from?
A big chunk of it, their royalty revenue just hit an all-time high. $580 million this quarter, 23% surge year on year.
Wow. And what's driving that?
It's largely thanks to two things. The adoption of their V9 architecture and the success of their compute subsystems. They call them CSS.
Okay. Gotta admit, those terms sound a little intimidating. Can you break them down for us non-engineers?
Sure. So the V9 architecture, think of it as the blueprint for building faster, more efficient chips.
Okay.
And CSS, it's like a pre-packaged set of chip designs that makes life easier for manufacturers. It's like IKEA furniture for chips, everything you need, ready to assemble.
So they're not just selling raw materials, it's a complete solution.
Exactly.
Yeah.
And it's working.
So every time a device using ARM stuff gets sold, they get a cut.
In the form of royalties.
Makes sense. So is that the whole story? Just royalties?
Not quite. They also get a big chunk of change from licensing. $403 million, up 14% year on year.
Hold on, licensing. What are they licensing?
Basically, they give other companies the right to use their designs and intellectual property.
This is where things get interesting to me. I mean, licensing sounds kind of boring compared to cutting-edge AI and chips. What's the big deal?
It's all about future growth. Licensing deals are usually signed way before any products are launched, so the surge in licensing, it tells us the demand for ARM tech is going to stay strong.
It's like a crystal ball giving us a peek into the future. I like it.
That's a great way to put it. And the reason everyone's so eager to license ARM's tech, that V9 architecture and those CSS packages we talked about, companies, especially those in AI, they're scrambling to get their hands on it. They know that's the key to building the next generation of devices.
Okay, so we got record revenue fueled by royalties and licensing, driven by strong demand, and a central role in the future of AI. They're covering all their bases, huh?
It seems that way. And get this, their future outlook is incredibly bright, projecting full-year revenue of around $4 billion. That's 24% year-on-year growth.
So they're exceeding even their own expectations. Sounds like they're in the driver's seat. But is anyone challenging them?
Well, there's always competition in tech, right?
Right.
We can dive into that later, but first, there's another piece of the puzzle we need to talk about. Their growing dominance in the data center market.
Now, that's a topic I'm really interested in. Tell me more. How is ARM shaking things up in the data center world?
Well, data centers have always been Intel's territory,
Right.
but ARM is starting to make some serious moves there. They're offering these energy-efficient, powerful chips, and the big players are taking notice.
Okay, so they're going up against the giant. But what's so special about ARM's approach? Why are these big companies choosing ARM over, the established leader?
One big reason is energy efficiency. Data centers use a ton of power, so any reduction in energy use means big savings on costs.
Makes sense. Those data centers are basically server farms running nonstop.
Exactly. But it's not just about being energy efficient. Their chips are also powerful enough to handle all that complex stuff data centers do, like cloud computing, AI, machine learning.
So lower costs and higher performance. No wonder they're catching on.
And it's more than just catching on, they're winning over some major names, like Amazon Web Services. They just announced that over 50% of their new CPU capacity in the past 2 years is based on ARM's Graviton processors.
Wow, 50%. That's a huge endorsement. It sounds like ARM is becoming a real contender in the data center market. But Intel's not just going to roll over, are they?
Of course not. Intel's a tough competitor. They've been around forever, and they're not afraid to innovate. They're pouring money into their own AI and data center solutions. This is going to be a fun battle to watch.
It's a classic David and Goliath story. ARM, the underdog trying to take down the champ. But we can't forget about the rest of ARM's business. We've talked about royalties, licensing, AI, data centers. There's got to be more to it, right?
Oh, there's definitely more.
Like, I'm curious about their financials. We've talked revenue, but what about expenses, profits? Are they actually managing all this growth well?
That's a great question. Sustainable growth is key. And looking at their financials, they seem to be doing a good job balancing investing for the future while staying profitable.
So we are making money.
Yeah, their non-GAAP operating profit hit almost $442 million, a near record. But like any company that's growing fast, their expenses are going up too, especially in research and development. That hit $522 million this quarter.
Makes sense. They got to spend money to stay ahead of the game, right?
Yep. That's how they come up with innovations like the V9 architecture and CSS. It's an investment in their future, and it's clearly paying off.
So what about their guidance? What are they predicting for the future?
Well, for Q4, they're looking at revenue between $1.175 billion and $1.275 billion. That could be another record-breaking quarter, possibly 32% year-on-year growth.
Whoa, they're going to break the billion-dollar mark again. What's making them so optimistic?
It's a bunch of things, really. Continued demand for their V9 and CSS packages, lots of licensing activity, and their expansion into data centers.
They're firing on all cylinders. So do they bump up their full-year guidance based on all this?
They did. Full-year revenue is now projected at around $4 billion. That's a 24% jump year on year.
Wow, even higher than their initial target.
Yep, which was 20%.
So it's all sunshine and roses for ARM, right?
Well, not quite. The tech world is always changing. There are definitely challenges ahead.
Like what?
Well, competition, for one. Like we talked about, Intel isn't going to just give up their market share.
Right, it's going to be a battle.
Exactly. ARM needs to keep innovating if they want to stay ahead. And then there's always the geopolitical stuff to worry about.
Oh, yeah, like what?
Think about the global chip shortage. That showed us just how fragile the tech industry can be. Supply chain issues, trade wars. Those things can really hurt a company like ARM, which relies on a network of partners all over the world.
So navigating that is crucial.
Absolutely. But it's not all doom and gloom. There are also tons of opportunities for ARM, like in the Internet of Things.
Ah, the IoT. Everyone's talking about it, but what's ARM's angle?
ARM chips are super energy efficient, which makes them perfect for all those low-power IoT devices. Smart home gadgets, wearables, sensors. Their tech is already in billions of devices. And as the IoT grows, so will demand for those chips.
So they're already in a good spot to take advantage of that growth.
Exactly. And then there's the metaverse. It's still early days, but as virtual and augmented reality become more mainstream, the demand for powerful and efficient chips is going to explode. And ARM could be a major player there.
They could be the ones powering our virtual adventures. That's pretty exciting. But let's get back to reality for a minute. What should investors be paying attention to when it comes to ARM?
Well, the big takeaway is this. ARM is a powerhouse. They have a history of innovation, and they're in a great position to capitalize on trends like AI and IoT. They're investing in the future, and while there are risks, they're a company worth keeping an eye on.
It definitely sounds like it. They're right in the middle of the tech revolution. But before we wrap up this part, we got to get to our outrageous but plausible trade idea. What's the "this is not financial advice" segment got for us today?
All right, here's one for you. Short Intel, long ARM. It's a bold move, I know, but like we've been saying, ARM's momentum in data centers is undeniable. They're taking on Intel, and this shift towards ARM-based servers could have a big impact on Intel's business.
Ooh, spicy. I like it. But remember, everyone, this is just speculation for fun, definitely not financial advice. Still, it makes you think. Now, before we move on to part three, where we'll dive even deeper into ARM's business model, I want to talk to the listeners for a second. If you're looking for a company that's leading the way in tech, a company that's on top of AI, the Internet of Things, and data centers, then ARM Holdings is a name you need to know.
Couldn't agree more. This company is shaping the future.
Welcome back to Talk Tickers. We're wrapping up our deep dive into ARM Holdings, and now it's time to get into the nitty-gritty, the details.
Yeah, we've talked about a lot, the record revenue, the role in AI, data centers, even that short Intel trade idea. But there's still more for investors to know about how ARM actually makes money.
So let's lift the hood and take a look. What are some of the finer points investors should know about their business model?
One thing that's important to remember is that ARM doesn't actually make chips themselves.
They don't.
Nope. They design the blueprints, the architecture, instruction sets, and then they license those designs out.
So it's like an architect designing a house. They don't actually build it. They just create the plans.
Perfect analogy. Their partners are the ones who actually manufacture the chips. So ARM's business is all about intellectual property, not physical production.
That's interesting. So they're not really affected by manufacturing issues or supply chain problems?
Right, it gives them a buffer. But it also means they need their partners to succeed. If those partners aren't selling chips, ARM doesn't make money.
It's like a team effort.
Exactly. It's a partnership. And there's another layer to it, too. Their royalty rates. The amount they earn per chip, it changes depending on the chip and the market.
So not all chips are equally profitable for them.
That's right. And that can be tricky for investors to understand. You have to look at the types of chips being sold, not just the total number.
It's not just about the numbers. You got to understand the bigger picture.
Absolutely. It's a complex business, but there's no question ARM is incredibly successful. They're innovating, they have great partners, and they're in a prime position to benefit from all the major tech trends.
They've built something really unique. Global dominance, not through manufacturing, but through ideas and collaboration.
And that's what makes them so interesting. They're not just making chips, they're shaping the future of technology.
Well said. Well, that wraps up our deep dive into ARM Holdings Q3 2025 earnings call.
Thanks for joining us on Talk Pickers. It's been fun exploring ARM Holdings with you.
And remember, everyone, stay curious, stay informed, and as always, never invest more than you can afford to lose. Until next time.